The last market report we did for October showed that the usual trends are still continuing. These trends are a persisting seller's market that is still cooling, increasing inventory, and contract activity that continues to decline. Combine those factors together and you get a more manageable environment for prospective buyers. Will the seller's market continue to soften as fewer buyers make their presence known? Will inventory increase at an even greater rate? Stay tuned for November's market report. 2 quick disclaimers. First, Merry Christmas. I hope you made great memories with your loved ones that will last an eternity. Secondly, there are other agents doing market reports for Las Vegas. You might see different stats in the categories discussed in this video. Agents across Las Vegas have different sources and those sources might have different data. For transparency's sake, I will link all the sources I have used personally to create this video market report in the description below. First up is the median sales price. November clocked in at $420,000, which is a $2,000 increase over October. Year over year, the increase has been marked at $65,000. We still continue the trend of consecutive gains in home values, but they are noticeably slowing, especially in the month-to-month. How long will these equity gains last before they level off in the next few months? Now we go to inventory in the Las Vegas Valley. November shows up at 8,657 units, an increase from 8,265 units in October. November 2021 displayed 6,642 units being available, clocking in a gain of 2,015 more units available for sale. This is the second time we have seen the yearly inventory difference in the thousands. This really showcases the different market environment we are in compared to last year. We now go to pending transactions, where a seller accepts a buyer offer and the transaction goes into escrow. November sits at 38,281 units being on the contract, marking a decrease of 1,982 fewer units being on the contract when compared to October. November of 2021 had 52,052 units under contract, which marks a decrease of 13,771 fewer buyers getting their offers accepted. We now go from pending to a final stage of an escrow, which is closed transactions. Simply put, these are the number of home transactions that finish escrow and transfer home ownership to the buyer. November clocks in at 40,610 units closing, marking a decrease of 2,266 units when compared to October. November 2021 sat at 52,446 closed units, showing a decrease of 11,836 fewer units closing year over year. We now go to our final stat, which is median days on market, or in other words, how long it takes from a listing to go live on the market to an accepted offer. November sits at 11 days on market, which is 1 day more than October. Annual gains have now shown a decline as it took 9 median days to sell in November of 2021. While 11 days on market is not bad for the sale of a property, the days on market are slightly increasing, which is something to take note of. Alright, I'm going to cover the pros and cons as it relates to the seller, buyer, and list trends that people should keep an eye on in terms of market health. For any prospective sellers, here are the things you should take note of. A lot of the things in this report will sound like a repeat of past reports, the only difference being the degree of trends. With that being said, the seller market continues. Inventory continues to be on the side of healthy demand. Inventory still goes under contract at fair market value relatively quickly, and home values keep increasing. If the prospective seller wants the best results possible, listing at fair market value will yield the shortest amount of time on market and the best chance at getting multiple offers. However, this seller market lies in the shadow of the seller's market that occurred in the summer of 2021, considerably so. While inventory is still low relative to demand, monthly inventory is still steadily increasing. With these steady monthly increases, we see a more drastic difference compared to last year's inventory circumstances. In addition, While sales prices continue to increase, the rate of the increase is getting even smaller. I remember when there were consecutive monthly equity gains of $5,000, well, now we're at the gain of $2,000. This really shows how equity gains have slowed in recent months. While inventory steadily increases, contract activity is worsening with each passing month. When combined inventory increases, the current decreases in contract activity, and the buyer pool shrinking due to the ever-present affordability challenges, you get a considerable cooling of the seller's market. With the cooling of the seller's market, prospective sellers should expect less overall leverage when negotiating offer terms with qualified prospective buyers. Secondly, let's cover the pros and cons for prospective buyers. While buyer affordability has gotten some slack in recent weeks, home buying affordability is still a tremendous obstacle for prospective buyers. While inflation posted a 7.1% figure in December, a 2% drop from the yearly high in June, inflation still remains elevated. One would consider inflation elevated due to the fact that the Federal Reserve still implemented a rate hike in the December meeting. This results in interest rates still being elevated for mortgages and a considerable shrinking of eligible buyers. However, there is a silver lining to almost everything, and this is no exception. As the buyer pool continues to shrink, buyers who are currently in the hunt will deal with less competition across the board. Current prospective buyers will find newfound leverage in constructing their purchase offer for a property. Not to mention, more inventory becomes available month to month, and this increases the options a ready, willing, and able buyer has. While the inflation figures still remain elevated, the decreases that have been occurring in the last few months are getting bigger. And although the Federal Reserve is still doing rate hikes, there is a minor comfort in the fact that they're doing 50 basis point hikes instead of the usual 75 basis points we saw earlier in the year. Now, what are the trends and patterns we should all keep a close eye on? Continue to keep an eye on inflation figures as each month passes and observe consumer confidence in the economy. If inflation keeps being elevated, the Federal Reserve will likely raise rates once again. As interest rates rise, expect home buying affordability to take even more damage. As fewer people become eligible to buy, the gap between supply and demand will shrink, cooling the seller's market even further. The rate of inflation continues to drop at a greater rate, but we are still in elevated inflation territory. The Federal Reserve starts 2023 with its meeting in January 31st. Well, that wraps up November's market report. If there are certain stats you want to know about or want to see a specific topic covered, please do let me know. If you're curious about your property value and want a well-formulated evaluation, have any questions related to buying, or just have any questions in general, please do not hesitate to reach out. If you have any feedback, that is also welcome as well. This is Oscar SanJuan with eXp Realty, signing off.